Hey, what's up? My name is Samuel Leeds, and in this video I want to talk about getting money from a bank. Now, I'm not talking about robbing banks. I'm not talking about going and making a cash withdrawal. I'm talking about getting money from a bank that's not your money. It's the bank's money, but you're getting it as a loan. And a lot of people don't really understand exactly how this works. And I think the most important thing when you're looking to borrow money, whether it's personal loan or a business loan, or whether it's a loan for a house, whether it's a loan for your house or a loan for one of your investment houses, you need to be able to look at it from the bank's or the lender's perspective. And I think this is the most important thing. See, a lot of people don't realize how powerful loans are and how much, actually, if you want to be a high net worth individual, you probably also need to be a high debt worth individual. And to be high debt worth, you need to be able to get your hands on bank's money and use it efficiently. So I hope this video is helpful. If you like my videos and if you like the idea of getting money from a bank that's not your money, do me a massive favor, smash the like button, and then I'm going to talk through the different types of loans. So, personal loans. A personal loan is very simply when you go to a bank and you say, can I borrow 20 grand for a wedding, for a car, for a party? And that's just a personal loan. Now, you're going to get a personal loan if the bank thinks that you can afford to pay the money back eventually. That's why they'll approve you of a personal loan. And weirdly, if you go to a bank and you say, can I have 20 grand please to get married, they'll give you the money. But if you say, can I have 20 grand please to buy an investment property, they won't give you the money, which is kind of strange. I've got my own theories behind why that is. I think that it's because I think that the society that we live in like people to be in bad debt, because then they have to rely on jobs, they have to rely on the government, and it just keeps, but that's my opinion. But looking at it from the lender's perspective, if you're going in and you're getting a personal loan, if you've got bad credit, if you've got no job, if you've got no means to not only pay the money back, but to even pay the interest payments, they're not going to want to give you the money. And on top of that, if you've got no assets, if you don't own anything, because if they give you 20 grand as a loan, but they know that you've got your own home, you're in a job, your wife's got a job, and they'll think, you know what, even if it has to kill them to pay the interest, we'll get it. Because if we don't get it, we'll go after them for their house or whatever. So they'll give you the loan. You'll be a guarantor to the loan, you'll have to pay it back, and that's a personal loan. I don't like personal loans for those reasons. I think if you can't afford something, then just don't get it. You might be like, I thought Samuel loved debt. Different kind of debt. So the next kind of debt is, which is very, very similar, is a residential mortgage. That is effectively the same thing in a way as getting a loan for a wedding. Because if you're getting a loan out for a house to live in, you're going to have to pay that money back. You're going to have to pay that money back at some point. And how are you going to pay it back? You're not going to be able to rent the house out. You're not going to. So this is why I rent where I live. Because again, getting a loan out, which a mortgage, by the way, is a loan. Getting a loan out to buy a house, to live in the house, is just basically buying something you can't afford. It's buying something that's not going to give you any money back. It's a liability. So that's why they're so strict on mortgages. If you're trying to get a residential mortgage to live in, you need to prove so much. They're going to look at how much you earn. They're going to ask you how much you spend. They're going to ask you if you've got any dependables and how much that costs. They're going to want to know your age. They're going to want to look at your salary, your earnings, and they're going to really, really go through you with a fine-tooth comb to check that you can get the mortgage. And the reason is because they know that if you buy a house to live in and you can't pay the mortgage back, it's going to be a pain. Now, of course, they're going to then take the house off you, but they're going to really, really, really pre-qualify you before you move into a house to live in. So that's personal loans. That's a personal mortgage to live in. Kind of sometimes tough to get. If you want to get that kind of loan, probably shouldn't, then you need to have a good credit and you need to have a decent income coming in. The higher your income, the better your credit, the easier you're going to be able to get that kind of debt. And what a lot of middle class people do is they get wrapped up in personal debt because they think, I've got a good income, I've got a good credit. Wow, I can get 50 grand loan. Well, personal loan, 50 grand. And every time you go into the bank, they'll say, would you like a loan? Would you like a loan? They'll almost press you to get a loan. They'll charge you a really high interest. You think, I'll get it because I can. You'll get it, and then you just have to work harder in your job. And then that's what we call the rat race. And they say even if you win the rat race, you're still a rat. So that is personal loans. Then we've got business loans. Now, a business loan is if maybe, you see on Dragon's Den where they'll be pitching the dragons. That's not a business loan because that's a dragon putting money, investing money into the business. That's more like a joint venture agreement. A business loan would be when you go to a bank and you say, hey, could I have £50,000 as a startup loan, and you give back a fixed return just to get your business started. Now, business loans historically are really tough to get because in the same way as a personal loan, the lender, the bank, needs to be able to know that the business is going to be able to pay back the money. The business needs to be strong enough, it needs to be tried and tested. But the thing is, if the business is tried and tested, is making good money, you probably don't need the business loan in the first place. So it's like a catch-22. Now, at the moment, they are giving bounce-back loans, and the interest on these is absolutely next to nothing. So I would probably suggest if you have a company set up, you can apply for a bounce-back loan. I'd highly suggest at least exploring that option because I can't remember off the top of my head exactly what the interest is. I've done videos about this before, but I took one. I took a bounce-back loan. So that's a business loan for your business, and it might have strings attached. Obviously, if it's a business loan, you need to use it for your business. You can't take a business loan and then go on holiday with it because that's not what the purpose of the loan is. That's a business loan. And then it brings us onto a completely different type of bank loans and type of debt. And this is when you're borrowing money to invest it into an asset. Completely different. If you're borrowing money from a bank to buy a buy-to-let property, the criteria, everything about it is different. Why is it different? Because instead of you taking that money out for yourself, you're taking that money out to invest it into something that's going to give you back money, and you're going to use that money for yourself. This is actually good debt. Difference between bad debt and good debt. So the great thing is, you might think, I'd never be able to get a loan out to invest in property. My credit's not very good. My salary's not very good. I'm too young, I'm too old, I'm too this, I'm too that. But actually, if it's a buy-to-let mortgage, if it's a loan for investment purposes, well, think of it from the lender's perspective. Do they care about you? Not really. What do they care about? They care about that the money's going to be able to pay back to them. So therefore, they care about where the money is going. So what they do with buy-to-let is they'll look at the investment. So they'll say, oh, you want to borrow 100 grand to buy a house to rent out? Okay, what's the house? Okay, let's have a look at the house. How much will that rent out for? And they'll check it out. What's the value of it? What, have you got a good deal on the house? They're looking at the investment, not the person that they're investing into. This is really good news, by the way, because sometimes people say to me, they say, Samuel, when are the banks going to stop giving you money to buy properties and to buy houses? Is there only so many mortgages that you can get? Is there only so much that you can borrow? And the answer is not really. No, there's not. You can borrow millions and millions and millions and millions of pounds, but it's not personal debt. It's debt to invest. It's good debt. So if you want to be able to start getting buy-to-let mortgages, sure, if you've got decent credit, it helps. If you've got a salary, but I know people that have got a £5,000 salary. They make £5 grand a year and they're getting buy-to-let mortgages, no problem. It also helps a little bit if you own a residential property. There's an advantage to owning a residential property because they think, oh, well, you've got a bit of experience in property for some reason. But I didn't have a residential mortgage. I started in buy-to-let, and I've now got I have millions and millions of pounds worth of debt, but it's good debt, not bad debt. So I just thought I'd give, because I get so many questions about debt and about personal loans, about how to get money from a bank. I thought I'd give a little bit of an overview of the different types of loans available. If you've got questions, feel free to comment them below and I'll do my best to answer. If you found this video helpful, smash the like button, subscribe. I usually do property investment videos on this channel and I do a video every single day. So do subscribe and I look forward to seeing you on the next video tomorrow. Thanks so much. Peace out.